Welcome to the Daily Brief, where I'll go over the action in the market for Friday, January 20th, and then we'll see how things look for Monday, January 23rd. And we had a pretty powerful up day, especially when it looked like we were switching over to a significant downtrend. We saw a pretty significant bounce. Now, personally, I think it had more to do with options expiration. You had the jockeying around of prices where a lot of the puts and calls maybe were going in and out of the money, and there were some really high open interest at different levels as they're getting ready to expire and have any value left. What we're going to look for now is what happens on Monday, because a lot of times when we have an up day on options expiration, it ends up being a down day on the following Monday. Let's go back and talk about what happened. Right at the open, we did have a higher open. There wasn't really much of a gap, but prices initially climbed above the daily pivot, which was at 39.02, and then it got all the way up to R1 at 39.19. Okay, didn't seem too crazy, at least at that point. But then prices continued to go higher, and they did not reach R2 right to begin with at 39.40. But then later in the day, it did come back and hit through R2 and went even above that. But we never did get up to R3, which was at 39.77. I had it calculated and ready to go, but we never got up to that level. We did end up closing, though, at the high, and we were up 1.89%. on above average volume. The technicals were still looking more negative overall, but if we see follow through buying, we could shift back over into a more positive stance. Of course, inflation and interest rates, that's what the market's really fixated on. Now, in Friday's session, some of the positive nature is being attributed to news out of Google and Netflix, where it's kind of interesting. Google announced that they're going to be cutting more jobs, and they went up, where a couple of days ago, Microsoft announced they were cutting jobs and their stock went down. So go figure. But there's still a real concern about the earnings per share and valuation concerns. And then we did have some Fed speak on Friday, but it really didn't play into the market action. Here is the intraday chart showing where we had a little higher open. We were able to get above the daily pivot rather quickly and get up to R1. Then we shot up, didn't get to R2, trailed off sideways, and it looked like maybe things were going to stall out about here, and then we started to come back down. Well, then some ferocious buying ended up coming in, pushing us above R2. R3 was up here. I didn't put it on the chart, but we ended up closing right at the high. So it was pretty positive as far as price action is concerned. What are some comments that we can make? Well, the NASDAQ was able to recoup all of its losses for the week just in Friday's session. That's positive. And then the strength is likely due to options expiration and then news coming out of Netflix as well as Google that was seen as positive. And we can also attribute some of this to short covering. You had a lot of people that have been negative on the market for a while. When they set up a short position, they have to sell to get in. If things start to move against them and they have to cover that, or they have to get out of that position, they have to buy to get out. And when you have a lot of that happening at the same time, that can influence prices to go higher and higher and higher. Also, growth outperformed value. Now, this is the same point that I had after Thursday's session. Even though we went down, growth was holding up a little better, even though both of them were down. Well, in Friday's session, both were up and growth outperformed, and I have some charts to show you of that. The S&P was able to regain its 50-day moving average at 39.27, as well as its 200-day moving average at about the 39.68 level. The dollar was down slightly, and interest rates were up, and copper is still hanging on to its gains, so we're just keeping an eye on that. We still have the 10 to the 5, the 10 to the 2, the 10 to the 3-month. Those yield curves are inverted. Sentiment has switched back over more to positive now with the up day at a reading of 59. We had existing home sales that came out. We had the reading come in at 4.02 million, which was more than the 3.96 million that they had expected, and a little bit less than the last time we had this report when it came out at 4.08 million. Our trend is still positive. The green line's still on top, but with this real shift that happened in Friday's session, the ADX is continuing to weaken, and we're still below 20, so it's more of a trendless environment. I've changed our bias over to positive and mixed just because I want to see what happens in Monday's session. And then I've also switched our momentum over to mixed because we spent a lot of the week going down only to have Friday pop back up. But then what's going to happen on Monday? Here is the chart that I've been showing pretty much in every video. We're trying to see, is price action in 2023 going to mirror that in other earlier time frames? Well, we're still wondering, are we going to stick with this time period from 2005 through 2008 where we might see some weakness going forward? And then we have this other chart from the late 90s, from 1998 through 2002, which also may suggest that we could see some weakness going forward. On a one-day basis, we probably overdid it as far as the advanced decline ratio is concerned. We didn't really overdo it based on price, but this might be a little extreme positive. And then we're looking at the VIX to S&P 500 correlation, where we saw the spike up and it's beginning to come down. It really hasn't changed all that much in the last couple of days, but we're still wondering, is this reading, after giving us an extreme reading, going to provide some support to the S&P? The Ulcer Index pretty much was flat from Thursday to Friday, where sentiment picked up a little bit and is more positive. It's a little more in line now with what we're seeing with the Ulcer Index. And the equity put-call ratio declined on an up day. Not really a surprise, but we're still seeing it going up with the 5-period simple moving average. And here's the longer look at that chart. We're still below this extreme area of 0.8. And we're wondering, will this decline produce some kind of support for the S&P? The VIX actually went down a little bit on a closing basis as well as on the bar chart. We're still very, very complacent as far as the VIX is concerned. And that might have influenced options, or options may be influencing the VIX. And here's the VIX of the VIX, where it declined a little bit with the up day, just the volatility of the VIX indicator. And our trend showing how we are still below the moving average, and the green line still on top and now advancing, where it looked like these two lines were going to cross. But our ADX is below 20, so we are in a trendless environment. And we continue to be that way pretty much since the first to middle part of December. Here's our daily chart showing how we were able to get back above the 50-period moving average and a little bit above the 200-day moving average. Is the market going to give another try to this trend line? That would be quite a positive change in events. And then down at the bottom, we see where volume was above average, but we didn't see the big spike that we quite often see that's associated with options expiration. And as far as the stochastics in the short term, just a little bit underneath extreme positive in the short term. We're still going down in the intermediate term and rolling over in the long short term version of this chart. The BPI actually showed a little bit of weakness. It didn't pick up this big reversal, probably because we were in this area not so long ago. So it actually declined a little bit, but it's still above 50. The fact that it's showing some weakness on a pretty strong up day, that's a bit of a warning sign. The Chaikin money flow is still holding up though. It advanced and is looking positive overall. And we're still in between these two fib levels on our Fibonacci retracement level. If we go higher, it's going to come down to getting through that trend line. The Swindlin Trading Oscillator continues to decline based on price and volume, and we're dropping below zero with both. In our moving average tree, just showing how we were able to regain a lot of these moving averages, and we're just a little bit above the 200-day simple moving average. We still have the 200-day exponential moving average above current prices. In the CMB Composite Index, it's now given an official and confirmed sell signal. The Elder Impulse system for the S&P 500 has switched back to positive with a green bar. McClellan Oscillator came back above zero, so that's turning more positive, which is also turning our summation index up based on price and volume. In the RSI 14 and 9, which I pointed out in yesterday's video because they dropped below 50, well, they turned back above 50. New highs, new lows. This is where we're still seeing some weakness. Even with the upward thrust of price, we did not see an expansion of new highs, and so our 5-period moving average is turning down, and we're flat to slightly declining with our 10-day differential. Advanced decline line showed some improvement both based on price and volume, but we're still coming back up to the underside of this declining moving average based on volume. The home builders are pretty much following the S&P, so they shot up just like the S&P did, and our ratio seems to be hanging in there for right now. We're looking for divergences of some kind, but we're not really seeing any right now. Then our Copic curve is still giving us a buy signal, as is the Pring bottom fisher. And then the Elder Impulse system for the diamonds, which is the ETF based on the Dow, it is still negative, even though it bounced up over 1% in Friday's session. And the Qs have switched back to positive after being neutral for the last couple of days. So it's encouraging that we saw strength coming out of the NASDAQ and the NASDAQ 100. It's a little bit concerning that we didn't see a lot of that follow through into the Dow. It's just a little bit different than what we've been seeing lately. And the mid-caps also had a pretty good day, up 1.65%, but they were coming right back up to this pivot level at R1. And copper still continues to hold on to most of its gains. It was up almost 0.5% in Friday's session. And I wanted to show the emerging markets just because we're starting to see what could be a golden cross. And a lot of folks really like to diversify into this. It gives you international exposure and in different economies that quite often produce more growth opportunities. Our possible positive scenarios, we are seeing some improvement with the Qs to the S&P 500 and discretionary to the S&P 500, as well as large cap growth to large cap value. And then looking at the different growth to value ratios with the large cap showing improvement, mid caps looking a little better, and small caps still staying above the moving average. Our 2-year spike, we're keeping an eye on that to see if it gives some short-term support to the S&P 500. Then we're keeping an eye on the small cap index after giving us a recent golden cross. It came down to the 50-period moving average and is now bouncing back up. And then our staples to S&P 500 ratio. This is really falling. And this could be positive for the market because other times when we spiked and started coming down, we see the reaction of the S&P 500. But we're not exactly sure this is happening while it's happening. That's why we watch it really closely. Is this just options expiration hangover? Is that what's going to happen in Monday's session? That we saw a really wild up day on Friday and now everybody's going to come back to earth on Monday? The technicals are turning negative, but they could improve if we see follow through buying. Of course, that only stands to reason, but we're getting kind of whipsawed here, where earlier in the week we were looking more positive and then things went negative. Now we're turning more negative and things are switching back more positive. And that's real indicative of a trendless environment. We just have the leading economic indicators, or LEI, coming out in Monday's session, and then all the geopolitical events with inflation and interest rates producing growth concerns. That's the real fixation of the market, and the EPS and valuation concerns, as well as individual earnings by companies. Then as far as our statistics for Monday on January 23rd, this is kind of negative. The Dow was only up 33.33% of the time, with the S&P and NASDAQ doing a little bit better. The S&P's up a little bit more than half the time, and the NASDAQ's up 42.9% of the time. And then looking back at all the Januaries for the last 23 years, we tend to be down more than up. And for the quarter, we're still in that November, December, January window. And then we're waiting until the end of January to see are we going to be positive or negative, because the S&P tends to follow that 83.33% of the time, whether it's up or down. So far, we're having a 2-0 score to the positive because of the Santa Claus rally in the first 5 trading days of the year. And then the market also likes that we're split between Republican and Democrat. So our scenarios for Monday can't really go with the down one yet. The technicals are turning more negative, but if we see more follow-through buying, that could switch things back to looking a lot more positive. It's really hard to go with the up scenario because we're still looking more negative than positive for the time being anyway. So we go with the sideways. Because our ADX is weakening, it's below 20, and it is positive with the green line on top. So our conclusion, the S&P is turning negative but could improve if buying continues. The short term, this is where we're looking like things might be turning back a little bit more positive. We're not really seeing that as much in the intermediate term, and we're just a little bit back to the 200-day moving average, and so I kept this at negative for right now. I want to see a pretty decisive close above the 200-day moving average before I switch that. Thank you. I hope you have a really nice weekend. I will be preparing the weekly video as well as the intermarket analysis video and the deep dive video over the weekend, and I'll get those posted whether it's through Saturday or Sunday or even into Monday. I've got some things going on this weekend, and I'll get those recorded just as soon as possible.